Today's video is going to be about the highest searched real estate topics right now. I went on to ChatGPT, I went on to Google, looked at a few different sites and researched what are the highest searched topics right now in real estate. And I found it really interesting. So the top 5 were: should I buy now or wait? 2, mortgage rates and affordability. 3, are home prices going up or down right now? 4, selling in a shifting market. And 5, first-time homebuyer advice. So let's go ahead and dive in. We're going to break each one of these down and really just have a conversation about each one. Now, if you are interested in buying real estate in our area, if you're interested in selling real estate, please shoot me a text, 417-439-7721. So let's dive in. The first one was, should I buy now or wait? And I think this is an interesting question. Number one, consumer sentiment, or the consumer sentiment for buying a home, the consumer confidence, is actually down to 17% in 2025. Now, this is historically extremely low. That means that 17% of people, when asked, were confident that now would be a good time to buy a home. I'm not necessarily one to say because the group thinks so, that's the way we need to go. One of the things we're seeing is that it does seem to be a very strong market. So to me, the question should not be, should I buy now? Instead, the question is, why are you buying? Dig into what your reasons are. If you're buying because it's time to upgrade, because you're renting and you want to take control and you want to build equity, because you've had a kid and you need more space, there are so many different things to look at. If you're just buying because that's what everybody else is doing, well, okay, maybe you need to wait. But the truth is, dig down, what are you actually looking for? Remember the hidden cost of waiting, right? If you're thinking, I want to wait for prices to go down, or I want to wait for interest rates to go down, which we'll talk about that in a minute, that hidden cost of waiting is the taxes on your current residence, the interest that you're paying on your current residence, the maintenance you're paying on your current residence. Maybe you rent right now. That hidden cost could actually be the rent that you're paying right now. You don't get that back. Now, we can talk in a little bit about some advantages of waiting if you need to, but I think it's just key to look at, why are you buying? And then once you've decided on why you're buying, because you want to start building your own equity, because you need your own place, because you've had a child, maybe because you're downsizing, any reason, I think that's the first step. And then dig into, is now a good time for you and your personal finances? Let's move on to the second one, mortgage rates and affordability. I've had this. Clients telling me, hey, they're waiting because they think that interest rates are going to go down. I even had a guy tell me today that he thought interest rates would go down to as low as 3% by the end of the year. I want to be clear, experts do not say that. Most of the experts that I saw, and I'm going to just quote bankrate.com, said that they could see the interest rate being between 5.7 and 6.5 by the end of the year. Right now, it's in the lower 6s. So when you were talking to the banking experts, to the financial, the economic experts, we're seeing that interest rate's actually not going to go down a lot. On the flip side, affordability right now is at 32%, meaning that 32% of the average income is what would go into buying the average house, right? So the affordability index is a factor that we as realtors, that bankers, economists look at when we're looking at housing and how this fits in the global market, or I guess in the national market. And that rate right now is 32%, which is actually higher than the average of 27%. Again, though, here's the factor that I'm going to look at. I don't think that mortgage rates and necessarily the affordability index should gauge whether you should buy a home or not. Once again, I'm going to encourage, go back to your numbers. What do your reserves look like, right? Have you figured out what you can afford in a payment? Not what the banker says you can afford in a payment. Maybe the banker says you can afford $2,000 a month. Is $2,000 a month comfortable for you, right? For you, it might turn out to be $1,300 a month, or $1,500 a month, or maybe $3,000 or $4,000 a month. The key is, look at it. What can you comfortably afford in your budget, knowing your numbers? And then once you know that number, do you have the reserves built up for that payment, right? Once you buy that house, it's yours, and the bank is going to expect you to make that payment whether you lose your job, get a pay cut, or break your leg. They're going to expect you to still make that payment. So you want to make sure you have reserves. And of course, you have some reserves set aside for the maintenance. I told you I'd talk about the advantages of renting. One of those can be that when the dishwasher goes out, you can call the landlord and have them come fix the dishwasher. Unfortunately, when you own your home, you are the landlord, which I also think is very fortunate. But that means that when the dishwasher goes out, when the doors and the walls need painted, that's going to be a cost you have to pay for. So you're just going to need to make sure that you have the reserves, you have the savings set aside to go ahead and take care of your home. So all that said, yes, interest rates could drop a little. I don't think they're going to 3%, maybe upper 5s. And the affordability index is a little bit higher. The key though is to look at your affordability index. How much can you afford What are your reserves? That's how you want to decide whether you're going to buy a home or not. Now, on to factor number three. Factor number three, I love how I said that. It's actually question number three. Are home prices going up or down? This is a great question. Once again, I've had clients that said, we're waiting to buy until the market crashes, right? Or maybe they said it in a nicer way and said that we're waiting for prices to go down. Now, I get it. Most sellers are not waiting for prices to go down. I've got good news for sellers, and I think actually good news for buyers. Prices are not expected to go down. Prices, when you look at the experts, the economists, they say that they're going to continue to trend upward. One of the reasons, and I'm not saying the only reason, but new housing starts are actually still down. Historically, we actually never caught up with the new housing that we lost in the 2008 crisis. Now, is that the only reason that housing prices are up? No, I think there's a lot of other factors, including inflation and things outside of just the housing market. And all factors point toward the fact that there are enough buyers in the market, the economy is still strong enough, and housing actually, believe it or not, there's still not enough inventory to generate or to cause prices to go down. So although I don't think you're going to see necessarily prices spike, barring outside influences, I think you will see a steady increase in pricing. Now, I said that's great news for sellers. I also think it's great news for buyers, because when you're looking at buying a home, you probably don't want to buy an asset that you know is going to drop in value right away. And I'm not saying that it doesn't drop a little in value, maybe in a year or two and then go back up. But historically, we've seen the price increase 4% every year. So literally in a 30-year period of owning a home, the price statistically doubles. So by waiting, you're actually costing yourself thousands and thousands of dollars. I truly think, once again, go back to your finances. What is your personal situation? If you are ready to buy a home, you have the reserves, you have the reasons, everything makes sense, you have the income to, of course, make the payment, it's time to buy a home. Now let's go on to the highest searched topic, number 4. 4 is selling in a shifting market. How do I do that? Searches like, why isn't my house selling? Were some of the top searches that were coming up. Here's the key, and this is a tough one for sellers. It becomes more important than ever to price your home correctly. What do I mean by that? I mean looking at the actual competition and what are they selling for, and being realistic with yourself. I know it's so easy to be looking at our own home and think that my granite is better than the neighbor's granite, or that my roof is newer than the neighbor's roof, or my foundation is better, my siding is better, whatever it is. The truth is, when buyers are looking, they generally expect you to have a good roof. They generally expect your countertops to be in good condition, and they actually want a good foundation. So when they're looking, they're actually just comparing apples to apples in their head. They're looking at the other home saying, hey, that home sold for $250,000. That home sold for $350,000. This home, your home, in their mind, the buyer's mind, should be worth X. So it becomes more important than ever for you as the seller to take a step back and look at it through unbiased eyes. Get a great real estate agent, and this is one of the values of a real estate agent, who can look at the price without the bias of having had their kids raised in the home, without the bias of having put all their own sweat equity into the home, but actually being able to look at it from a numbers standpoint and say, what is this home worth on today's market? Again, the bottom line is it's important to price correctly. The true enemy to selling a home for top dollar in today's market is time on market. Most buyers, when they are looking at homes, they've asked, when we walk in a home, they ask, how long has it been on the market? I like to call it groupthink. They think, the buyer, that if the home's been on the market 80 days, there must be a reason everybody else didn't like it, and it's probably the reason they're not going to like it. So the main factor with a home when you're selling it in a shifting market, price it correctly and respond quickly to the market. If you're not willing to price it at a point that will sell in today's market, then you're probably better off to keep it and keep it off the market. Otherwise, time on market will grow and buyers will start to bring you lower offers or walk in with an already preset bias to something's wrong with this home. Now, second thing I would talk about is fix the little things. Those little things, and I've heard the seller say it, and sometimes I agree, right? Where it's like, oh, I don't want to repaint that room because I know it's bright pink, but the seller or the buyer will probably repaint it anyway with whatever color they want. Well, the truth is, in today's market where buyers are paying more than they've ever paid, right? They are paying a higher interest rate that we just talked about. They are buying in a market where the affordability index, even if it isn't where you as the seller want it to be, is still higher for the buyer than what they've seen in the past. All these factors mean that the buyers are a little more picky than they've been in the past. When they're spending top dollar, they're making sure that the paint is done correctly. They're making sure the colors look good. They're making sure the flooring is in good condition. And yes, they want a good roof and they want a good HVAC too. The main thing is, don't just look at the big things and go, well, my roof is good and my heat and air is good. You also have to take some time and dig in and declutter, make sure the paint looks good, and make sure the floors are in good condition. I've done another video on this, or just shoot me a text and I'd love to guide you through what you can do on your specific home to make sure you're ready. But the top two things I would say, selling in a shifting market: price it right and pay attention to the itty bitty nitty gritty details on your home to make sure your home's ready to sell. All right, we're on to item number 5. And once again, I said item number 5. It's the top searched thing out there on real estate, number 5. And that is first-time homebuyer advice. What does a first-time homebuyer do in the face of all of this? They're paying top dollar. They're paying prices that nobody else has ever had to pay, right? Their neighbors or their friends or their family who bought a home 3-4 years ago paid less. So they're approaching this going, what do I do? Well, here's the first thing I would recommend. Once again, you're going to hear, sounds like a broken record. Go look at your finances. Go make sure you're ready. Then go talk to a lender. And these two can kind of go hand in hand. Go talk to a lender. Make sure you're ready. What does your credit score need to be? Is a good question to ask the lender. Generally, around the 620 credit score is a fantastic credit score. There are some lenders who can do with a lesser credit score, and that can actually cost you more in fees on the lending side. Now, that doesn't mean you shouldn't buy a home if you have a credit score that's maybe 600. It just means you need to look at your numbers and make sure that it makes sense for you to still buy that home. At the end of the day, you're still building equity, and I'll probably still encourage it if your numbers are good. Second question we see a lot is, how much down payment do I need? Well, I can answer for our local area. You can pay or buy a home with a 20% conventional loan, a 10% conventional loan, and there are actually many programs out there that may allow you to buy with a 5% or even a 3.5% down. There's even some programs that, depending on where you're buying, whether you're buying maybe in Carthage or Carl Junction or Neosho, and you could potentially buy for 0% down. Now, if you're buying in Joplin or Webb City, you're going to have to bring a minimum of 3.5% down typically. But again, shoot me a text if you've got questions. I can direct you to a great lender and make sure that they tell you exactly what you'll have to bring to the closing table. Another question we see is, how long does it take to buy a home? Well, the answer is that depends. When we're looking at buying a home, though, we're typically looking between a 30 and 90-day process. It can take 30 days to find the right home, and it typically takes about 30 days once you go under contract and have an agreed contract with a seller. It takes about 30 days for you to close on that and that to become your home. If you have any other questions, hit me up. I'm going to be doing another video on the next items. That would be number 6 through 10, top searched items. If you have questions, hit me up. My number is, of course, 417-439-7721, or shoot a message in the comments. I'd love to talk to you. Make it an amazing week.